If you're one of those out there who still owns crypto, talk about holding on for dear life. When 2022 began, Bitcoin was around $48,000 and the total global market capitalization of crypto was 2.2 trillion. And Amber Group's Michael Wu made this prediction at the time.
This year, I think one thing for sure is we're going to see some volatility.
He wasn't wrong, was he? Just a week later, Bitcoin had plunged closer to 41,000 after the Fed signaled that rate hikes were to come, and after a short-lived recovery, Russia's invasion of Ukraine on February the 24th set markets reeling again.
The initial reaction of a lot of people will be, I don't know, and therefore I'm going to take risk off the table.
Total cap dropped below 1.6 trillion, 25% lower than where it had started the year. As the end of the first quarter approached, though, things were starting to look up. Prices had rallied as Dubai really began to push on with opening up to crypto. Binance, Bybit, FTX all acquired licenses to operate in the Emirati state just that month. But that's pretty much where the good news ended for the year. On March the 23rd, we saw Ronin Bridge hacked. Crypto worth over 600 million at the time was stolen, confidence rocked. Things really, though, started to go wrong in early May when Terra's USD stablecoin lost its peg. The Luna Foundation Guard spent $2.8 billion in failed efforts to try and salvage the situation. Bitcoin then crashed below the $30,000 mark, and over 400 billion was further wiped off market cap. US Treasury Secretary Janet Yellen responded by calling for tighter regulation.
So I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate.
June saw another tumble after US inflation data leapt the most in over 40 years. At the time, Austin Federa of Solana Labs said that investors should be looking towards venture capital plays instead.
One of the things to do during a down market is to really invest in tooling and infrastructure that makes it easier for people to come in and build whatever you're building.
A couple of months of relative calm followed with a slight uptick in markets as anticipation built around Ethereum's merge.
The market price are reflecting that sentiment, going into quite strong price movements in light of very positive news in terms of testnet, and then anticipation of the final migration.
The merge was, of course, completed September 15th, and at that point, some even started speculating about an end to the crypto winter. In October, institutional crypto trading technology provider Talos told us they were seeing faster client take-up on the sell side.
Long-term views on digital assets and their potential is undiminished, and they recognize that market downturns are probably a good time to build.
But then on November the 2nd, CoinDesk reported that the dividing line between FTX and Alameda Research was in fact very blurry, and less than 10 days later, FTX had filed for bankruptcy. Bitcoin slumped below $17,000, 100 billion further was pulled out of crypto. BlockFi also then filed for bankruptcy shortly afterwards, while Kraken and Bybit both announced plans to cut jobs. There was one positive move in November, however. According to CryptoSlam, NFT sales rose for the first time in 7 months. So is that a hopeful sign of things to come? We asked some industry experts how they are thinking and planning for 2023.
When there's a bear market and there's not as much upward kind of trend on price, you start seeing those business models that are perhaps less robust fall over it. And I think that's what we're seeing, and it's hard to know for how long that will go on, but what will be the case is that you'll see the technology being used and continue to be used.
I think this is a tough year for everyone, and next year could be even tougher. So I would advise companies, not just cryptocurrency companies, but companies in general, to keep cash and to cut down unnecessary expenses and optimize for productivity, efficiency. Even big companies can collapse without a good management on the cash flow.
Further down the road is relatively easy to foresee. So practically everyone, the exchange will have to fine-tune their business model. I think if your exchange that's playing a good boy for a very long time, it will survive.
It's not before a couple of months that we will know exactly from which basement we start again. When you look at the macro context, that also doesn't look really good, right? So the industry definitely will be much leaner, but I think there is a lot of lessons learned, and you can already see some of the reactions and how, for example, transparency is becoming a major theme, how governance is becoming a major theme. So I'm optimistic that actually a lot of good will come out of that.
Use this as the opportunity to get those bad actors out. Let's get the regulations in here. And, that way the next bull run, we have something that's actually sustainable, and we will have a solid foundation at that point.
It has been a momentous 12 months for the crypto sector, and we at Forkast have been trying our best to cover everything that's been going on. If you like any of the content, please hit that subscribe button and share it. It means a lot to us as well to be a part of this conversation. We really want to hear your thoughts in the comments below or on social media.